I might get a lot of hate for this video, but in this video, I'm going to share my thoughts on the acquisition between Sweetwater and Aphria. And personally, I do not like the acquisition. I mean, there are certain things I like about the acquisition, that's for sure. But there's also certain aspects I don't like about the acquisition. In this video, I will share my thoughts on it. So the first thing I like about the acquisition is now Aphria is no longer an MJ company. They're also a beer company, an alcohol company, which is good. Will they get into hard liquor? I don't know, but that is also a big possibility down the road, considering the fact that Aphria already has an established retail networks of alcohol sellers, so I can see them possibly getting into hard liquor and improving the margins of Sweetwater, but they would definitely have to invest more money into the business, and they would basically need to raise more money, dilute shareholders to basically grow the business. But overall, I don't like this acquisition. If this was an all-stock deal, I would be more happy, but this is not an all-stock deal. This is a mostly cash deal and a little bit of stock. If it was more towards the stock and less cash, I would be a lot more happier with this deal, but it's not. It's more cash than stock. That means that the people that are selling this company, they don't believe in Aphria's long-term stock price. If they did, they would have took the stock instead of the cash. But they took more cash than stock because they want the cash and they don't want to deal with the volatility of Aphria stock and trying to sell out at a certain price. So that's the biggest reason why I don't like this deal, is because it's such a big cash deal. But it is good because it helps establish Aphria's brand. Is branding super important? I don't know, because the United States has so many companies after branding. There's like True Eve, there's Curaleaf, there's even Madman. There's a lot of MJ companies out in the United States. There's so much competition, so is this acquisition real, the branding part of it, really assertive? I don't believe so. I truly don't believe that it's going to really help Aphria with the branding. But I could be wrong. I'm not a branding expert. I just believe that United States has a lot of competition when it comes to branding. It is cool that they are the number one. So according to this press release, they are the number one best-selling new craft beer in the U.S. for the year ending December 31st, 2019, and the second best-selling beer and number one best-selling new craft beer for the U.S. That's a pretty big deal, because there's a lot of beer companies in the U.S., and the fact that they are the second best-selling beer, that means that Sweetwater makes pretty good product, and that's a good reason why I'm liking the company. And then they also are increasing their production, especially with Aphria having a bunch of cash. They will definitely help them increase their production even further. So I'm betting that 2021, the production could increase even more dramatically, even 50%. It depends on how well the products do in Canada, if they can establish themselves as a good player in Canada, because they are bringing Sweetwater Brewing Company products to Canada, which is another market. It's not as big as the US market, but it is a market, and it could help them grow their revenues and possibly profit down the road. And another reason why I like the company, it is a profitable company. They make about $22.1 million of profit per year. Well, that's like estimate profit anyways. But it's not guaranteed, and things can go wrong, and profitability can fluctuate. But at the moment, they are estimating $22 million of profit for the year ending. Oh, I guess this was 2019. They were making 22 million. It could fluctuate their profit, but that's not the point. The point is, this makes Aphria a player in the alcohol space, and if Aphria can grow that business, they can make a lot of. They can be a really big company in the future. So, net revenues approximate. Oh no, okay, that's not it. What is it? Okay, so they are paying Sweetwater $250 million of cash and $50 million in stock, and they also need to dilute shareholders by $100 million from its existing $100 million at the market equity program. Available cash on hand. Available has significant cash on hand to fund the acquisition, but they are going to dilute shareholders because they want more cash to grow the business. So this is quite a bit of dilution and quite a bit of cash they're going to spend on this business. But if Aphria can grow the business and make it a successful business, then yes, the acquisition is totally worth it. So this is the reason why I don't like it. So according to Aphria, the combined company pro forma asset is $346 million in cash, but Aphria has to give the company another $250 million. So that would leave Aphria with $146 million of cash on hand. And then they're going to dilute shareholders $100 million, which would give them around $250 million of cash and a pretty diluted stock. So, and the fact that Aphria is already valued at roughly $2 billion, I say that, yeah, this acquisition is good. Short term, it might pump the stock up to $6, $7, but I think the stock is going to be volatile until Aphria shows that they can turn that business around and make that business into a super successful alcohol beer company. If they can do that, I think Aphria stock will get rewarded big time, but that would ultimately depend on earnings. So short term, yes, I think the stock is going to go up. I might buy a little bit of shares tomorrow for the ride up because I think a lot of people are just going to pump money into the stock, and then so I'm thinking of buying it and a little bit of shares. Friday, if the stock is up, significantly, I'm probably gonna just take my profit because Canopy's earnings are on Monday, and I'm really scared of the earnings report. I think that Aphria is going to tank the MJ market when they report the earnings. I could be wrong. This is pure speculation on my part. We'll see what happens. But with this acquisition, they're also taking on long-term liabilities, which is not good. Long-term liabilities of $121 million. So not only the company has negative cash, which is kind of weird, they also have long-term liabilities of $121 million. It feels like if Aphria didn't acquire this company, the company could have went bankrupt because they have no cash on their balance sheet, which is strange because if you don't have any cash, usually you go bankrupt. But that's a little concerning to me in my just my opinion. But so it's both positive and negative. It's gonna take a long time for Aphria to take this piece of asset that they acquire and turn it into something that shareholders find very rewarding for the company long term. It's gonna be it's a tough tough to do that. It's hard. Business is not easy, so we'll see what happens. I think Aphria stock is going to be volatile. I think it's going to have a short-term pump, and it's probably going to dump eventually. My opinion anyways. So yeah, this acquisition caused Aphria stock to go up 58 cents, 11.67%. I believe, just my opinion, that Aphria will probably make it back to its 52-week high, but I do think that eventually it will crash back down again. Just my opinion. We'll see. We'll see where big money takes this, because let's be honest, retail investors are going to get excited for this. They are going to push money into the stock. It's going to make it skyrocket short term, and then the stock's probably going to sell off and pull back down again eventually, because MJ stocks are volatile. They're very volatile, and I'm totally expecting Aphria to crash back down again eventually. So yeah, let's look at Aphria's earnings report, because I need to, kill more time, and I do think that this is important. So Aphria had is this the right one? So yeah, 3 months. No, this is High Tide. Okay, so this is Aphria's earnings. So they made a total net revenue of $145 million. They have gross profits of a total of $43 million. You cannot put in biological assets, because if they included the biological asset, their gross profit actually came out to $75 million. I think that biological asset is retarded. That's my opinion. I think that biological assets should not be on a balance sheet at all, because you just gotta think about MJ in the market right now. Most MJ companies, they are producing way too much product, and I just don't think that biological assets should be added onto gross profit at all. But that's just the way the accounting works in the MJ space, and I really find it retarded. But besides that point, like we take the general administration, which is $28 million. So what you could take away from this $54 million is $4.26 million of share-based compensation, and $5 million of So it's about $10 million you can take away from their balance sheet, which would be roughly $44 million. So they are making a gross profit of $43. So Aphria is literally just break even on this company. The company's break even. Eventually they will flip a profit, but right now they are break even, which is not very impressive. I think eventually Aphria will become profitable, but I don't know. At the end of the day, big money really moves the stock. So if big money wants to pump up Aphria stock in the future because they are making some profit, great. But Aphria is going to need to dilute shareholders consistently, because they need that money to continue to grow and expand fast, and without the capital markets, Aphria would not be able to grow that fast, and they need the capital markets. And it feels like, I'll be honest with you, it feels like the MJ space, they get like unlimited cash. They can dilute shareholders as much as they like, and if they need the money, it's gonna dilute shareholders, and then eventually when they're so diluted, they're gonna be like, oh, let's do a reverse split and get rid of our shares. But will Aphria do a reverse split in the future? I don't know, but I know for sure that Aphria will dilute shareholders further, because they are going to need the money to continue to expand and grow their business, and hopefully make something out of these businesses that they're acquiring. But right now, Aphria has a total of 289 million shares. With the acquisition, it would bring them roughly over 300 million. And then if they exercise the at the market program, which is not 100 million, which would bring them to $320 million, roughly $320 million. In the future, they're still going to keep in my opinion, they're going to acquire more companies. They're gonna keep diluting, and their share outstanding will increase. But if they can grow the business, well, if we look at Neo, they're super diluted, but big money still wants to push their stock up. So if Aphria becomes a good business, doesn't matter how diluted they are, big money will still push the stock price up. Just as a shareholder, you won't get as much as a return on investment unless you buy Aphria at a super low aggressive price. And the only way to do that is if some problems come up with Aphria that cause the price to tank hard, and then you have to gamble that Aphria is going to recover from that crash in stock price. But hey, that's my opinion. Anyways, thanks for watching. Subscribe for future updates and have a great day. Bye.